Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Friday, October 13th, 2017. Happy Friday the 13th, everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Very tightly coiled price action right now. Again, one thing we looked at here recently is the PivotBoss Advanced ADR. The ADR is looking at average daily range, and you can also user define how many days it looks for that range and average daily range. So if you set that to a 1 instead of a 5, it'd look at 1 day range. Right now I'm looking at 5-day average range. So what's the range for a 5-day period? And you can see right now these bars right here represent the current 5-day range, and whenever it is pink, it tells you it is significantly compressed compared to average being this white line. And so right now we're in a period here where this price compression is very compressed compared to average, and that usually precedes the next wave of volatility. So we could be looking at expansion at some point. Again, the PIMA trigger zone is sloping higher. This 2517 is very important with the LVN. If we were to have that flush, a big one-day flush or a pullback of some sort, multi-day pullback, that right there could provide the optimum buying opportunity for another round of strength, perhaps in the 2600. Of course, we haven't seen many pullbacks here over the last couple of months, so any poke down below these lows could be an opportunity to reject, similar to what happened here before for a shot at new highs. Again, very narrow range, so there is sometimes a tendency to test both sides of the range before you actually see a resolution and a breakout. If you look at the intraday time frame for a moment, we just had a release of some economic data. If you look right here, we had a release of core CPI, core retail sales. You also have FOMC member Rosingen speaking and retail sales. So all that just came out here. We still have a little bit more to come out, including Michigan consumer sentiment, business inventories, more FOMC members speaking, and other goodies down the way. So quite a bit to get to the rest of the day. If you look here at the ES on the intraday, we just had a burst higher on this recent release of economic reports, and we're now right at recent highs. So this is a spot. This is the previous high of the session, the previous session. So if there's any rejection here, we could be looking at a quick return to value. At the moment, everything is sloping way up, and again, the volatility has been very light, so we'll continue to watch to see if there are signs of expansion here soon. If you take a look at crude oil, let's look at this thing in the higher time frame chart. In a higher time frame crude, we've seen a push higher. We got a push higher. This thing rallied here recently after a failure to maintain acceptance below the previous session's low. So right here, price broke below the previous session's low, dropped pretty sharply yesterday, and then stopped making lower lows and instead started making higher lows, and then moderately higher and higher lows, and that formed a rounded bottom yesterday. Moderate rounded bottom that had us short-term bullish back toward moderate key level, and then perhaps back to the recent pivot high, as those usually do. It took couple of days here and a little bit of volatility the previous session, but overall that was a nice recovery here. We talked about before that this has a sloping channel feel to it, right? So you can see right here kind of that channel, and then you can see right here kind of this channel. And so the idea was, after this top, we were talking about price likely coming back to value, chop, and eventually coming back up. And so still, while this is bullish in the short-term time frame, I'm leaving open the possibility that this thing might jump backward yet again. We have a rather wide pivot range here, and that means we could continue to chop in that pivot range, kind of like we did this month here, while maintaining an upward bias, because we are still sloping upwards. So chop with an upward bias. Eventually we could see that 54-55 zone, which would be the kind of the top end of the channel. So that's kind of the structure right now and the framework we're working off of in crude. On a short-term basis, still trending up. Major LVN at 51.20 to defend on a pullback if it's seen. All right, let's take a look here at gold futures. So gold recently got a push higher from 1292.90 up to 1303. That was on the recent release of economic data just now. A moment before that, or just ahead of that, it had reached 1300 and was looking at resistance there on a pullback. So right now, this is looking very, very strong. Still an uptrending market. The previous session looked like it was beginning to show signs of rejection. The idea was that price needed to hold and maintain acceptance below 1296s, but by the end of the day, it basically closed 1295.90, which is 96s, and that's the rejection level. So we saw price just kind of chew through that level here recently. Still testing off of 1300, so that's still a key pivot, and with price pushing through it now and the midpoint not quite at the high, we may see continued uptrending behavior with 1300, 1301 being a key intraday pivot. So perhaps more uptrending behavior until 1300 is violated. Here's a look at the NQ. The NQ here also with very narrow range. This is the previous session's closing bar, which tells you that the previous 5-day range was very, very narrow compared to average being the white bar. And then look at the previous 5-day ranges if you go back in time. And you look at the just kind of the oscillating behavior. It just goes in waves. Sometimes it's low volatility, sometimes it's high. Sometimes it's low, sometimes it's high. And it's a constant rhythm. High, low, high, low, high, low. And at some point here, pretty soon, we're going to shake out and we're going to start to see some high range times, and then it's going to come back to low. So that's what we're anticipating right now. This is the quiet before the storm. We're likely going to see more overall strength until proven otherwise. That's just been the framework. So the best case scenario is still a push downward. That gives you your bargain buying opportunities into the LVN here, into the previous month's high, which would be 60.20. Here's 66K evens. Here's the trigger zone. So much great confluence at this zone, or even a little lower, that could provide a great buying opportunity on the way up. So right now, watching for signs of any sign of weakness for a buying opportunity for a stretch to new highs. So that's what we're looking for here, and we'll see how this thing plays out heading into the rest of the session. Now, if you look at the intraday time frame just briefly, one thing you'll notice is that price is currently testing the previous session's high and is currently showing a little bit of early signs of rejection. So here's the previous high, that's the white line, and price rallied here. Now the rally occurred in part due to the recent release of economic news. We got a little bit of rejection here. So if there's any lower highs that start to form, or if price really can't get back above 60.97, again, that might be a short-term opportunity back to value, perhaps even across the range, as this thing has been a very short-term trading range. If this thing is going to see expansion, again, it may stay outside of R3 and start to push to new highs and find acceptance beyond that zone. Right now, it may be still a fade the edges until proven otherwise type of scenario. And right now, the edges would be this edge and this edge. So a rejection here could bring you back to value. A rejection here could bring you back to value. That's kind of the intraday framework until proven otherwise, unless we start to see expansion from this range. All right, everyone, that's it for now. Let's see how these play out the rest of the session. Good luck, trade well, and happy Friday.